Hi, my name is Noah Rosenfarb, and I'm a certified divorce financial analyst with Freedom Divorce Advisors. Today we'd like to talk about tax credits for stay-at-home moms that are divorced. So what's important to know is there's 4 different types of tax credits that the government offers to parents to help them offset the cost of raising children. The first tax credit that I'll tell you about is called the Earned Income Tax Credit. And that credit can only be claimed by a custodial parent. So if you're a divorced stay-at-home mom and you claim your child as a dependent, that's fine, but you have to also be the custodial parent. That means the child has to live with you for 50% or more of the year. The Earned Income Tax Credit is a refundable tax credit, which means if you don't have taxes that you owe to the government actually gives you money back. So it's another form of social service that the government offers, the federal government, to provide a refundable tax credit to low-income families. So each year the rules for what the income and earnings are that you could have vary. So check with your accountant, with your tax preparer, or do a quick search on eHow for figuring out what the Earned Income Tax Credit income limit is in the year that you're preparing your return. Another type of credit is called the Child and Dependent Care Credit. Again, this is a tax credit that's going to be claimed only by the custodial parent. It doesn't matter if your divorce agreement allows you or your former spouse to claim the child as a dependent. It's based on whom the child lives with. The important thing, though, is if you're a divorced stay-at-home mom, that means you're not going to have earned income. And the Child and Dependent Care Credit is only good for those parents where they actually earn money by virtue of their efforts, not money that you might receive in alimony or child support or interest or dividends. So if you're working and you have to have dependent care costs, like your child's in daycare or aftercare at school, because that you're working, then you might be eligible for that tax credit. The other type of tax credits are the child tax credit, and the child tax credit follows whomever claims the dependent. So in your divorce agreement, either you or your former spouse would be eligible to claim your child as a dependent on your tax return. Whoever has that benefit is the one that would be eligible for the child tax credit. So the child tax credit is $1,000 for each qualifying child. And you want to make sure when you're negotiating your divorce agreement, if you're not yet divorced, that you evaluate who's going to claim each child in which year and who would be eligible for this type of tax credit. The last tax credits are called education tax credits, and they apply to children that are receiving secondary education, college education. There's 2 different types of college education tax credits, and those are claimed by the parent that gets the dependent. So again, in your divorce agreement, if you're the one that gets to claim a child as a dependent and that child's going to college, then you're the one that would benefit from the education tax credit. If it's your spouse that gets to claim the child, even though that child lives with you when they're home from school or they're going to school from home, they're not away at school, that's irrelevant to the IRS. They want to know that you're the parent that claims the dependent exemption. So if you are, you'll be able to apply for the American Opportunity Tax Credit or the Lifetime Learning Credit. And those credits are based upon where you are in school, whether you're in the first 2 years of your college education or your second 2 years. So make sure you speak with a qualified tax professional about the impact of these credits, because they could be really significant and it's worth having some professional advice. I'm Noah Rosenfarb, a certified divorce financial analyst with Freedom Divorce Advisors.